for our next sessions of ESG Summit 2025, organized by SSB and Cochin chapter of ICMAI. As we move forward in today's agenda, we now turn our attention to the financial dimension of sustainability, where capital meets conscience and investment decisions shape long-term impact. Finance plays a pivotal role in accelerating the ESG agenda, whether it is through green finance, ESG linked instruments, or regulatory frameworks. Capital allocation today has the power to influence sustainable business behavior and inclusive growth. Our next technical session will explore how financial institutions, investors, and corporates can integrate sustainability considerations into investment and decision making while also offering key regulatory perspectives shaping responsible investment in India. It is my privilege to introduce our distinguished speaker for this session, CMA Venkateshwaran Ramakrishnan. CMA Venkateshwaran Ramakrishnan is presently General Manager at the Inter-Regulatory Interface Group in the Department of Economic and Policy Analysis at SEBI. He earned his master's in public administration with a specialization in economic policy management from Columbia University in the city of New York after securing a fellowship. Since then, he has also been serving as one of the program's ambassadors in South Asia. He is also a fellow member of the Institute of Cost Accountants of India and holds a master's degree in economics and is also a postgraduate diploma holder in securities law and goods and services tax. He served as a member of the Indirect Taxation Committee of the ICMAI during 2022-23 and has been the SEBI nominee member of the Sustainability Standards Board of ICMAI since 2023-24. Within SEBI, he has worked in the Office of the Chairman, the Integrated Surveillance Department, and the Department of Economic and Policy Analysis, and has also served as an adjudicating officer. He was on deputation to the Financial Stability and Development Council for a period of 2 years. He has undergone several in-person training programs at reputed global institutions, including the Asian Development Bank, US SEC, IMF institutes in India and Singapore, University of Chicago Booth School of Business, and the World Bank. A seasoned trainer for executive development programs, CMA Venkateshwaran Ramakrishnan has also been the faculty for certificate course on ESG offered by the ICMAI. We are truly honored to have such a distinguished expert here with us today. I request CMA Harihara Subramanian, Coimbatore chapter, to welcome our esteemed speaker with a sapling. Please join me in warmly welcoming CMA Venkateshwaran Ramakrishnan as he shares his insights on strengthening sustainable finance and responsible investment, investing for impact and value. Over to you, sir.
Very good morning to all of you. So, this is one conference where, after discussing about the framework as well as the assurance that are being put in place, we are actually now looking forward to the financing aspect of the problems or the risk and opportunities that we have been discussing over these 2 days. In this context, I just wanted to begin with the perspective of what is the size of the problem that we are having. Now, there are actually, like in the case of Kerala's comprehensive ESG policy, yesterday we just saw that it is in the context of the nationally defined contributions and also in the context of the global developments that we have come out with the comprehensive ESG policy. So here, for the climate finance, if I have to just give two contexts, so I will look at the emerging market and developing economies, of which India is also one. What is the total requirement for transitioning to net zero? So the source for my data, that is by the independent high-level expert group on climate finance, set up by the United Nations Climate Change Conferences of 2021 and 2022. Now, they have estimated that the emerging market and developing economies will have to spend about 2.4 trillion US dollars per year by 2030. And $1 trillion per year has to come from external sources. Means those countries which are developed will have to chip in with that 1 trillion US dollars. Now, Niti Aayog, they have actually come out with an India energy security scenario 2047, wherein they have estimated that the total investment required for energy transition is $250 billion per year till 2047. Now, this is the emerging market context, and this is the Indian context. Now, the problem is that government can lay down the policy, but government has high levels of fiscal deficit, and because of that, its public debt to GDP ratio is already at unsustainable levels for some of the economies. So you cannot expect, in spite of the fact that the public good that will emanate out of addressing the climate risk and opportunities is so high, we cannot expect the government to chip in with the required source of climate finance. That is why it is estimated that a majority of that has to come from private sources. That is the context in which today I am trying to familiarize you with the various sources of climate finance. But before I just jump into that one, I wanted to give, see, the topic is investing for impact and value. So very clearly, the impact is how we are addressing the risk from climate change. So the transition path, like we have already said, India will move to net zero by 2070. Now, the financing has to come from private sector more than what will come from the public sector. So what is the requirement from the Indian corporate sector, expectation from the corporate sector? So that is what we will be looking at, the finance options. But before that, what is their transition plan? So I am not going to deal entirely into the national scenario, but I will just restrict to the Kerala scenario. Now, how I am going to do is, I am just giving you the transition plan that has been laid by the listed companies whose registered office is in Kerala and who have filed their BRSR report. So definitely they are within the top 1,000 companies. So as you can see from the slide, there are 14 companies. And if you look at the second column, that is their rank in terms of market capitalization. Now, if you look at it, the biggest company from Kerala, I mean, in that sense, you should understand it is the listed company. It's not the private company that I'm talking about. So the public listed companies, the biggest one from from Kerala, that is ranked 135, and that is Muthoot Finance. Then we have Kalyan Jewellers, Fertilizers and Chemicals Travancore Limited, FSCT is there, Cochin Shipyard is there, Federal Bank is there, Apollo Tyres is there, V-Guard Industries, Manappuram Finance, South Indian Bank, CSB Bank Limited, Geojit Financial Limited, Kitex Garments Limited, ESAF Small Finance Bank, and Popular Vehicles and Services. So you can see the lowest one, it is having a rank of 1,214 in the total market capitalization of NSE listed companies when you consider the 6 months from June to December. Now, can you please guess? I mean, I have given the total number there. It's 3 lakh, all these 14 companies put together, 3,95,221 crores of rupees is the market capitalization of these BRSR filing companies. Can any one of you guess? I mean, I want a wild guess also. What will be the share of these companies in India's total market capitalization? Because one perspective is that quickly, we are short of time. I mean, Yeah? 18 to 20%. So, okay. Anybody else? 3%. Oh, yeah. So that's what. So I will just move ahead. So, I mean, what I'm trying to say is that, see, this is what actually the, when you look at data, the perspectives that you get, see, these are the, I'm just giving you a clue because you could have just taken into account the fact that we are not there even in the top 100. So we are only 0.871% of the total stock market capitalization of India, less than 1%. Now, why I'm saying is, so then in previous session, it was mentioned that this BRSR is applicable to top 1,000 companies. What is the share of the top 1,000 companies in the total market capitalization? Top 1,000 companies. There are about 7,000 plus listed public companies as of 30th September 2025. Top 1,000. 80%? You can be more optimistic there. Wild guess. So that is 97.9%. So this is actually, what I want to tell you is, when you are specifying or mandating the BRSR for the top 1,000 companies, you are actually covering almost 98% of the total market capitalization. And if it was a case of, value chain also, as of now, that is remaining as a voluntary one. If value chain is also covered, then you can imagine the extent of sustainability reporting that will be happening in the country in terms of a comparison with the overall economy. Now, and I told you in the top 100 companies, they account for 61.63%. Now, here also you can just see out of 3,95,000 crores, 77, see, like we just see it is happening there. Muthoot Finance is accounting for 77,333 crores of rupees. So it's very, very, heavily skewed towards the top. Now, in this context, I will show you the transition path. Actually, I had made the transition path for all these 14 companies because for meeting those transition requirements only, you require climate finance. So in the interest of time, I will just make show it to you few companies. So let's go to Muthoot Finance because that's the topmost one. Because that itself will show you how this field of sustainability reporting and transition path is evolving. So let's go to that PDF document. So while they load, so in that transition path, actually what SEBI in the BRSR has required is that specific commitments, goals, and targets set by the company with defined timelines, if any, are there. That is the first data point. Second data point is they have to report the performance of the entity against the specific commitments, goals, and targets, along with reasons in case the same are not met. And then there is a question about governance, leadership, and oversight, which also covers which is the highest authority in that listed entity which decides on sustainability matters. So just wanted to cover before you what is the level, whether it is a director or whether it is a board or whether it is a committee of the board. So as regards Muthoot Finance, they have environment, social, and governance. I will just read through because when it comes, we can see in the screen. So in an environment, they have sustainable infrastructure related goals are there. Employee engagement and sustainable commuting. So one of the goal that they have set under that one is expand the number of EV charging stations available at their premises. Then community and ecosystem restoration is another set of goals. Now, social, they say that improve the customer relationship score, the net promoter score, what they call, aligned with the net promoter score, that's what it is. And among governance, they say that establish annual ESG skilling programs for senior management, and also align with RBI's draft guidelines on climate-related financial disclosures. Now, when I come to the actual performance, they say that, I mean, this is what actually, the thing is, yesterday we heard about, the takeaways are more important than the conferences. The implementation is more important than policy making. So I am just telling you, when you are required, mandated by the regulator to give commitments, goals, and targets. So I will give also an example where it is specifically mentioned. Here it is very good English. Like, I am just telling you, it is, when we say we will become net zero by 2070, very clear. Indian Railways has given a net zero by 2030, and we are already in 2025 end. So, this is what actually, and in governance, leadership, and oversight, what I have written is, our 800-year business legacy forms the bedrock of our ESG practices, guiding our strategic decisions and fostering growth and community empowerment. This enduring commitment is perfectly captured by our motto, unchanging values in changing times. So this is what, but the good thing is that the board of Muthoot Finance has a committee, ESG committee, to look into the BRSR related as well as sustainability related matters. Kalyan, this file I can arrange to be sent to all of you after the class. FSCT, I will just give only the achievement that I have mentioned. Workforce diversity increased to 11% in financial year 25, which was 10% the year before. Scope 2 emission has decreased by 28.69% compared to the level the year before. Cochin Shipyard Limited, we yesterday had the full presentation of how they are having their transition path, so I am not touching that one. But one good thing, I would have been happy if it was ready by now, but let's me get into that one. Federal Bank. Oh, yeah, okay. Let's go to Federal Bank. That's a good one, actually. So, that is where the bank in its BRSR report has said that the bank has committed not to do fresh lending to certain sectors, like, carbon intensive sectors is what I am just mentioning, which has significant ESG risk. Then, bank has committed to reducing its coal-related sub-project exposure to 50% by December 2025 against a baseline of March 2021 and further to nil by 2030. Then it says that its loan book, it will grow to 13,000 crore by December 2025. Then 500 kilowatt of in-house solar power generation capacity by March 2025, reach 1 lakh liter of water conservation capacity by March 2025, finance at least 10 lakh women entrepreneurs through banking correspondent channel by March 2028, at least 10% of bank premises to be green by March 2028, and maintain diversity ratio of 40% or above at all times. Now, next comes the performance against these goals. So, fresh loans to exclusion activities are restricted within their framework. Coal-related project exposure on March 31, 2025 stood at 0.39% as against March 2021 figure of 3.49%. See how the finance to the carbon intensive sectors have come down. Okay, next is bank's green lending portfolio is 9,280 crores of rupees as at end March 2025. It has added 150 kilowatt rooftop solar capacity during the year, and all put together, as on that date, they had 530 kilowatt hour of solar power generation capacity. It has added a storage capacity of 10,000 liter for rainwater harvesting during the year. It has 1,28,500 liter capacity of rainwater harvesting cumulative as on that date. 12,45,000 women entrepreneurs were financed through banking correspondent channel, and 2.59% of their premises are green certified. gender diversity ratio is 42.6% as against the target of 40%. So this is what I'm trying to tell is, this is what actually the BRSR actually wants the stakeholders to come to know from the disclosures that the listed entity will be making. Now, the question of how the climate finance comes is that now the entity, now in this case the federal bank, will have to make investments. How is it that it is going to finance those investments to achieve these goals and targets is what actually it has to think about, and it has to decide which is that instrument that it will be tapping to get those funds. Now, Federal Bank has a risk management committee which will be looking into sustainability matters. Now, one good one, Apollo Tires, next one. I mean, VGOD I have not put there because, of course, they said that, you read the chairman's message. So in the BRSR report, that reference to chairman's message is only given. No input about these two things are given. Now, if you go to Apollo Tires, just see the second sentence. They have said that they are committed to net zero by 2050. Then they have given their timelines for reduction of scope 1 and scope 2 emissions and how much of the power they will get from renewable energy sources and how is it that the water withdrawal intensity will be reduced. So these are the, some of the goals. It's a clear case where, they are actually putting one statement over there. By 2050, we will be net zero. And you can actually look into the performance against the goals also. And in this company, Apollo Tires, they have a business responsibility and sustainability committee formed also. Now, I mentioned about FSCT and Cochin Shipyard Limited. Of course, in both cases, it is the MD who is in charge of sustainability reporting and disclosures. It is not a committee of the board. I just thought, I just remembered about that one. Now, if you look at, Manappuram Finance, it's almost the same only. What I want to just, for the purpose of bringing a good comparison, let's look at, go to the second last. Let's go to CSB Bank Limited. Let's go to CSB Bank. It's not second last, third last, I think. If you can see that one, I am saying CSB Bank, or you can even look at the South Indian Bank also. When compared to what Federal Bank had reported, you look at what is it that these two banks have done in the reporting. So where clear goals, targets, metrics were mentioned, two other banks, their disclosures are very different. And CSB Bank has a corporate social responsibility committee. Now the last one the second last one I will just deal will be the next one, Keytex Garments. Though not set any such specific commitment goals, we continue to adhere all the guiding principles. And their performance against this goal is, we are adhering to all the guiding principles. So this is what, and they have a risk management committee to look into sustainability related matters. Now, if you go to Geojit Financial Services Limited, let's start from the second para, the net promoter score, that is actually the customer relationship management. They say that it has improved from 2.12 to 16.04 in 23-24. So as against negative 16.04, it has come to 2.12 for financial year 24-25. And one more difference, if you note, is that in the goals and targets, they have given English. They don't put any numbers there. But when they are reporting on the performance, they are giving actual numbers. Scope 1 emissions reduced by 20.66%. Scope 2 emissions reduced by 73%. Similarly, another good thing they are saying that electricity consumption is tracked through an in-house software so that the electricity consumption of Geojit head office and branches are uploaded and consumption can be monitored. A threshold value for maximum electricity consumption at branches has been set up based on built-up area and available electronic items. Incidents on any deviation on the threshold value are notified to respective branches through email with measures to reduce energy consumption. Now, rooftop solar panels they have installed, and that rooftop solar panels is providing 4% of their energy consumption at the head office. Similarly, they have given GST emissions from employee commuting has been reduced by 31%. So this is actually one good performance reporting in terms of metrics, and they have a stakeholder relationship committee and corporate social responsibility committee. Popular Vehicles and Services Limited, just like Kitex, they have no goals or targets, and so they have no performance also to report. So the last one is the ISAF Small Finance. So I will just conclude my running of the actual BRSR transition path, because this example should give you the transition path. Now, how is it that these companies are planning to finance these goals and targets is where the climate finance comes into the picture. Now, I have actually, let's go back to the presentation. So I actually listed down the various instruments, but before I get into that, so as I told you, government also is one of the providers of climate finance. So they actually, Government of India has come out with a framework called sovereign green bonds. Now, sovereign green bonds, there have been instances of Government of India raising money since 22-23. So in 22-23, as against the budgeted amount of 16,000 crores, they actually spent on green objectives. Now, before I get into the get into the actual expenditure on green objectives. So what is green objective as regards climate finance instruments? It is mostly based on use of proceeds. It's use of proceeds, so it has to be deployed on objectives which are green. And if a company or anybody who is raising climate finance, it need not be a company also, if they are not deploying on those green objectives, but reporting it as, they have deployed for green objectives, then it is called greenwashing. Now, so in 22-23, as against 60,000 crores that was mobilized by sovereign green bonds, government spent 16,923. 23-24, they had 20,000 crores as the budget and actual also, but they spent 20,786 crores of rupees. 24-25, the year that just went by, they had raised 21,697 crore. Now, question is, what are the green objectives for these sovereign green bonds? So they have, first, the Ministry of Environment, Forest and Climate Change. They have the National Mission for a Green India. So the expenses towards that one, of that ministry. Now, Ranjini is here, and earlier our chief guest also. So housing and urban affairs. So metro projects equity investment. So that is actually something that can be financed out of the proceeds of issuance of a sovereign green bond. Then new and renewable energy. So that scheme called KUSUM, Kisan Urja Suraksha Evam Uttam Mahabhiyan, National Green Hydrogen. See, yesterday we were talking about hydrogen powered vessels. So National Green Hydrogen Mission. One thing which now Kerala also is getting the benefit is the PM Surya Garg Mufti Bijli Yojana. So the subsidy that you are getting, it could be financed out of the proceeds from the issuance of sovereign green bonds. Similarly, another last one head is the railways. So electric locomotives, the production of that one can be covered. Similarly, construction of metro railways. So this is what actually, so what I want to tell you is that it has to be on green objectives. Second is that these objectives also has to have a framework. So it will be mostly the international framework, which is the International Capital Markets Association or the Loan Market Association if it is a borrowing. Now, so sovereign green bonds, and let's go to the next instrument is about green deposits. Now, no. Okay, so back. So green deposits are something which are actually available for us also to put our money. Now, if you see this one, just one more slide before. Yeah, see, this also is one thing where you know that the framework has been put in place. Banks have a policy for raising green deposits. And if you are raising the money, deposits from us in terms of a green deposit, then it can be only deployed in those objectives meet the criteria of green objectives. So, like waste treatment or water, air, energy, those type of things. And if you look at it, there are 15 banks, and wherever available, the name of the deposit is also there. SBI tops, if you can see that one, that is the biggest in terms of green deposits mobilized, but all put together, they have only 3,363 crores of rupees that is mobilized till now. Now, the ESG schemes of mutual funds. Yesterday, sir was also mentioning, chief guest was mentioning about ESG schemes of mutual funds. Now, ESG schemes of mutual funds are also something that is open to us in the sense that rather than putting, in a large cap scheme or a mid cap scheme or a, thematic fund, you can put in it in the ESG schemes. And that ESG scheme is defined in terms of a few criteria. So one is that, they have strategies, investment strategies. Like, if you are looking into the key information memorandum, it says that investment objective. So if it is large cap, it will be only investing in companies which are categorized as large cap. So some of the, actually there are 6 strategies. So one is exclusion. So just like we said, carbon intensive. So that is excluded. Then second strategy is integration. Third is like, yesterday we saw about a few case studies also. So they are the best in class and positive screening. The fourth one is impact investing. Like we all wanted to see that, the money that we are putting for investment, it actually makes certain impact. So impact investing is the fourth strategy. Fifth is sustainable objectives. And sixth and the last is transition or transition related matters. So those schemes will only invest in these objectives, number one. So you get the comfort that, yes, you are able to make a contribution towards the country's march towards net zero. And how is it that, you will be assured is like it has something to do with the BRSR. 80% of the assets of those schemes has to be invested in companies that report on BRSR core and take the assurance or assessment. And the remaining 20% has to be in companies which report on the BRSR comprehensive. So this is actually, the thing that ensures that your investment objectives are actually met, and you will come to know it when you are getting to see the annual report that are being sent to the investors. And next comes and also here also see another thing is that if you see the ESGC I have given, so here also SBI mutual fund that has almost 5,600, which is almost more than the total by all the schemes. So it's very less, 10,000 or less than 11,000 crores of rupees. And if you look at the total size of the domestic mutual fund industry, or the amount is even less than the money that is mobilized to buy mutual funds every month by way of systematic investment plans. So the cumulative asset under management till date. The other one is about social sector, because ESG, the most prominent letters are E and S. Now, So if you see, there is actually, a few years before people were putting money in small and mid cap. Then they went into thematic. Now there is growth of passive funds like exchange traded funds and index funds. So few things are, one is that, they look at what is the risk adjusted return. Also the expense ratio, because the passive funds are growing because the expense is lower than the active funds. So returns are something that determines the investor preference for a particular scheme. So these schemes till date are not able to outperform the other schemes. Now, next is about, so I was telling that, in ESG, I mean, like till a few years before, the emphasis was on profit or governance. Now the emphasis is on people, so social and planet or the environment. Now, if you go to the social aspect of climate finance, so there are social stock exchange platforms of BSE and NSE. They are actually having the facility of social enterprises. So there are two categories of social enterprises: for-profit social enterprises and not-for-profit organizations, NPOs. And they have to have their objectives, and those objectives now are mapped almost to the CSR objectives, and they have to serve underdeveloped regions or underserved populations, and they have to ensure that the revenue or the expenditure or the number of customers are mainly from those regions and those customers. Only then you can be categorized as a social enterprise. And why it is being made like this is because this is like a donation. So that is why that not-for-profit organization, the instrument for raising the finance is the zero coupon zero principle. So anybody who makes an investment in zero coupon zero principle instrument, you will not get any periodic returns, either in the way of an interest or dividend, nothing, no rights issue. And impact is made. So this is what actually the social impact assessment is, what actually the assessor will be giving. In that case, once the impact is made or the objective is accomplished, there will not be any return of that money that you have put it in the zero coupon zero principle instrument. Here also, if you see, so far there are only 14 on NSE and 2 on BSE, and the amount raised is actually in single digits. So that's what actually the growth of this segment. Now the third one is actually the most it will become the most prominent one going forward is the bonds. So we have the green bonds as well as the ESG debt securities. Now here also, like, it could be a blue bond, say for example water or ocean. It could be a yellow bond, or it could be a transition bond. So these are all the different types of instruments, and even some of the municipalities are also now, because water treatment is something that is an objective that can be addressed and it will meet the criteria. And so this is actually the bonds. So from the corporate bond side, you have a green bond or the ESG debt securities. And in the case of ESG debt securities, it covers, in addition to the green bonds, the social bonds, sustainability bonds, sustainability linked bonds. So these are also covered, so that actually the global suite of instruments, everything is covered when you are looking at the ESG debt securities. Now, I would like to conclude here and would like to address if there are any questions.
Coming years can be.
So one is that that future returns I cannot predict. So,
Because especially going by the way in which ESG awareness is getting popularized and then enforceable in the industry. So we will not be able to predict that we will get a decent return. So I may choose to invest my money in maybe in a fixed deposit or a treasury deposit because my hard-earned money I don't want to go loose. So since there is no statutory backing for ESG to be implemented in the companies as of now, even though top 1,000 companies are mandatorily to be reporting on the basis of the framework only, still the Kerala government is having only a policy framework. We don't know what exactly the future will be. Unless there is a statutory backing, so anybody who is thinking of investing their hard-earned money here in such bonds or debts or whatever may be, they will not be able to take a positive decision.
returns are something that actually determine what is the instrument that you are, going for. So that way, like let's take it, when you are going to make a deposit, fixed deposit, you will compare what is the interest that is offered on a green deposit as well as the other deposit. And accordingly, you will choose the one which offers you, higher rate of interest. That's why, many people go to cooperative banks because they may be offering more than what the public sector bank or private sector bank is offering. Huh? So that is one aspect. So what I'm trying to tell is, so they also have to be mindful of the fact that if they have to raise the deposit, they have to offer an attractive interest rate. And today, the market is actually open for pricing. There is no administered interest rate. There is no, any entity telling the banks how to price their product, number one. Similarly, coming to mutual fund also, see, like top 1,000 companies are actually what is their investable universe. Now, if their fund manager is, because, see, you look at the other schemes, large cap or mid cap. What is large cap? Large cap is the top 100. What is mid cap? Mid cap is 101 to 250. And small cap is anybody from 251 onwards. So the top 1,000 companies, and we have given the statistics also, what is the share of market capitalization. And mutual funds will be only investing within that top 1,000. I can tell you they won't invest beyond that. So if they can make the right choice of the scripts for that non-ESG scheme, if they do it here, and there are so much of awareness being created today, so that can actually make a difference. And what I say is that, like SIP itself, if you see, till 2020, there was not such a large mobilization of money from the households into the equity mutual fund scheme. Today, it is happening. So what I'm saying is that there will be a paradigm shift. And as we also know, there are climate risks are there. So the companies have to adapt. If the companies adapt very well, there will be definitely investment coming in. So at that point of time, I fully agree with you, the return on your investment will improve.